I do like a basic analysis. So I do my structure highs and lows, you know, low, high, low. I've got my premium up here. I've got my discount down here. It's the 50% that's in between this low and this high. And once I do that, I'm then looking to see where there's very specific interactions with price. Again, I can make a separate video about key levels later on if I want, which is a very requested topic. But we can see here supply, something I broke down earlier, supply, you know, supply, and then of course we started to break above this supply. So we can see here sellers in control, sellers in control, sellers in control, and now here, meh, it's a bit meh. So again, how do I know there's supply over here? Well, it comes down to this thing, doesn't it? Well, it comes down to you understanding, and more importantly, you just reading what the market's telling you, right? You don't need to reinvent the wheel, or you should not be reinventing the wheel. You need to look at the price action and say, okay, what is the price action doing? What are the buyers doing? What are the sellers doing, right? So this is a key level here, for example. Thursday, you know, shorts above the weekly opening price. This is what was happening in that level, right? So that was the execution, and I think order flow I made yeah, there you go. So what was going on inside the level was we had the aggressive buy orders, right? So there was my execution here, 7 contracts on MES, risking about, you know, 30 to about 15 points to make probably like 20 points or something, not a huge risk to reward or whatever it was that day. But the question then becomes, if you're not trading without order flow, and I want to finish on this note, if you're not trading without order flow, then you shouldn't be trading at all, right? You shouldn't be trading the markets at all if you don't understand order flow, because what you're doing is you are trying to fly a plane without a license, blindfolded across the sea, right? You're going to crash. Like there's no two ways about it anymore. So if we look specifically at, we'll just finish off, right? So let's kind of let's go back to where we started, right? So we started here. So hopefully at the end of this video I've given you something to think about. Maybe not change your mind forever, but I've given you something to think about. So if you're trading sweeps, you need to stop. If you're trading market structure shifts, understand why the shift actually happened. If you're trading fair value gaps or fair value gaps, you have a higher chance of winning the lottery in the long term. If you're trading support and resistance without understanding how they work, you're essentially flying that plane blindfolded across the sea. And trend lines, you know, the angle of your trend line does not matter, right? And more importantly, your angle of 62 degrees or whatever it is will not be enough against a multi-trillion or billion-dollar market ever. So you